Do you guys remember that movie called Limitless, which starred Bradley Cooper? In the movie, he played this struggling author in New York City, but then takes his drug called NZT48. On the drug, he acquires this perfect recall memory and is able to analyze information at this incredible speed, basically organizing all of the unstructured data in his brain for him to now be super smart and able to solve complex questions, so smart that he could almost predict the future. So today, I'm talking about a company that does exactly what that drug did for Bradley Cooper in that movie, but for companies in the real world. Today, I'm talking about Palantir. Okay, so Palantir is listed on the New York Stock Exchange and keeps popping up in my video comments, and my friends are also talking about it. And now ARK Invest, my most recent ETF investment, has also steadily begun increasing their holdings of it as well. So today, I'm going to dive into this blazing hot new stock that only went public this year, and whether or not I'm going to be adding it to my own personal portfolio. So let me give you the breakdown of today's video that summarizes my research on this company as well as my investment stance. So we'll start off with 1, Palantir's business model, 2, their latest financial performance, 3, key risks I personally see in this investment, and as always, number 4, what I'm going to actually personally do with this stock. So let's go. So what is Palantir's business model? Now, the business model touches on many important investment themes. This includes things like the digital revolution, artificial intelligence, and this whole idea of data is king theme. However, unlike many of the companies that we know like Facebook and Google, Palantir is not based on the monetization of personal data. So the way the company describes its business model is that it actually builds software that lets organizations integrate their data, their decisions, and their operations into one software platform which they build. So the idea is that in doing so, this allows organizations to better manage the data that they already lawfully control, and essentially empowers organizations to help them answer complex questions about their business, their target markets, their clients, and essentially brings the right data to the right people who need it. So its core platform essentially allows users to quantify and manage large pools of unstructured data. So we all have endless amounts of data all around us, and the majority of the data out there is actually fairly messy and unstructured all over the place, and it just exists without much purpose. So this is Palantir's business angle, and that's where they actually come in to actually figure out a way to manipulate that information and data for more productive purposes that people actually never imagined before. And that is the competitive edge that Palantir offers and puts them at the forefront of the next data revolution of our world. So the company actually started doing software for the intelligence community at the height of the war on terror. But since then, they've managed to expand their workings with commercial clients as well, and not just government agencies. So they have their core platform, which is called Gotham. And this platform is designed to basically help defense and intelligence agencies. Using big data, instead of helping companies to drive business outcomes, it was actually data to help, for example, fight insurgents in Afghanistan, for example. So since then, the adoption of their services have expanded to other government bodies, which I'll explain later in part 2 of this video. Now, the pure value of their platform organizing unstructured data has led to obviously a much wider application for other organizations and not just governments. So enter Foundry, which is the solution that opens their market opportunity. This is essentially their commercial data platform targeted for all industries, from financial to healthcare to transport and many more. Basically, any company out there that wants to make sense of the data that they actually already hold and use it to better value in the business will approach Palantir for their solution. So think about it, right? The whole world today is digital and everyone needs to get more out of their data. So Palantir actually estimates their total addressable market for both government as well as this new commercial solutions that they're offering has a total addressable market of about $190 billion. So plenty of market opportunity for them to dominate. It gives you a quick overview of who they are and what their solutions that they offer. Let's look at part 2, which is their latest financial performance. So they just recently announced their third quarter performance last month, and it wasn't surprising why the stock price has been at an absolute tear the last few months. The company's growth and momentum across the whole entire business essentially has lived up to the hype. So they actually generated just under $290 million in revenue in the third quarter of 2020. And this actually represented an increase of 52% year on year, demonstrating that despite everything that's happened in 2020 and all the corporate spending cuts, the demand for their specific software has actually increased steadily over the past year with more and more adoption. So they updated that they secured 3 major deals during the quarter: a $91 million contract with the US Army, a $36 million contract with the National Institutes of Health, and a $300 million contract renewal with an unnamed aerospace customer. And most recently, a $44 million expansion deal with the FDA that just came out a few weeks ago. So their revenue guidance for the full year of 2020 was also raised to a range of $1.07 billion to $1.072 billion, which would actually represent a growth rate of 44%, which shows that they actually have quite a strong visibility into the future revenue due to their longer term contracts with these clients and the continued acceleration of people adopting their platforms. So Gotham, which is their more governance solution, accounted for 50% of their revenue during the quarter, which was actually up 51% from a year earlier. And while the remaining 44% came from their Foundry platform, some people actually think that the company is actually too dependent on their government contracts, while others argue actually the government contracts provides a strong revenue stream that is fairly steady. But ultimately, if you think about it, it's a fairly limited market if it's just government work. So I'm personally more focused on their commercial expansion of the Foundry software solution. So Foundry's revenue actually rose 35% year over year to $126 million during the quarter. And they actually reported they pulled a major consumer goods company, I don't know who that is, from an unnamed rival, but it still couldn't keep pace with the growth of their government solution Gotham, which actually grew revenue 68% year over year to $160 million. Another key metric which I thought was quite important was their average revenue generated per customer. This was actually up 38% from the same period last year, and actually demonstrates that they have a very sticky software solution and a good customer satisfaction level, with many businesses actually increasing the amount of business that they actually do with Palantir. So in terms of their customer concentration, it is actually decreasing, which is always a risk when they have an over-reliance on one or two clients, and in this case, on the government. So they actually reported that their revenue from their top 20 customers constituted 61% of their total revenue for the period, which was actually down from 68% from the first 9 months of last year. So this shows that they're actually diversifying the revenue streams more and more, and this is also headed in the right direction. So Palantir's top line growth looks really great and really exciting, and really has been priced into the stock, but it is still operating at a loss, and its net loss actually widened from year over year from $140 million last year to $850 million this year. Most of that loss was actually attributed to the $847 million in stock-based compensation expenses, which was actually related to their direct listing, which actually happened in September in 2020. So if we took this out though, they actually did show some positive operating income of about $73 million, which is fairly encouraging. Okay, so on to part 3, which are the key risks that I see in this investment. There's a lot of great stuff about this company, but there's also some key things that did raise a red flag for me. So the company, and based on what they do and working with a lot of government agencies, obviously have quite a secretive culture, and the company was founded by Peter Thiel, the tech entrepreneur and venture capitalist, who is a longtime member of the Facebook board of directors. The company was also founded by its current CEO, Alice Karp, which is another founder, as well as its president, Stephen Cohen. So all of the Palantir founders are awarded what the company calls Class F shares, which is said to have variable voting power. So no matter what, they'll always actually control 49.9% of all of the voting power in the company itself, even if they sell down their share positions. So this is actually pretty out there, and it's not really typical for publicly listed companies. And if you do love the management, that's probably okay. But if you're not sure about them, this investment is essentially banking on these guys forever doing the right thing by this company, even after they potentially sell away all of their personal shares in it. The company's also drawn some harsh criticism in the past due to some of its work with the government. Back in 2019, they had a contract with the US Immigration and Customs Enforcement, and they essentially provided digital profiling tools to actually help the agency deport undocumented immigrants. And at the time, when the CEO renewed this contract with ICE worth over $42 million, there was quite a lot of strong opposition from not only the public, but also employees of Palantir. So obviously PR is a big thing in today's world, and with this whole idea of ethical investing gaining more and more popularity, parts of the market may actually disagree with what the company does at times, which again can pose a risk, but then again, a lot of people don't agree with what Facebook and Google do either. And those companies have made a crap load of money for their investors. So I'm a bit on the fence about this one. So the other key risk for me is that the stock is insanely valued right now. It trades at about 28 times this year's sales and about 22 times 2021 sales. Those valuations though might seem pretty high, but if you actually compare it with some of the other tech IPOs that actually happened this year, it's actually not too bad. And if you guys have been following me, obviously I just had a recent foray into Lemonade. I am personally a little bit weary about adding another high flyer to my own portfolio. So that leads me on to the last section of today's video, what I'm going to do with this stock. So clearly the company is expanding dramatically, and it does represent this massive and quite unique investment opportunity. And its most recent contracts and continued competitiveness obviously highlights its potential as an investment. But I grouped this stock together with all the hot tech IPOs that have happened this year, like I mentioned, and it currently has a market cap of $45 billion. So it's pretty much tripled in price recently to get there. And the single biggest risk I do see in this stock is its insane valuation at the moment. But you guys know that I love my growth stocks, and I already have a pretty high exposure to really expensive companies right now. Companies like The Trade Desk, Mercado Libre, and Teladoc, and most recently Lemonade, like I mentioned. So I really personally can't bring myself to also jump on board with this one right now at its current price. And although this company was quite mysterious to me early on, after I did some research into it, I do like it and I like its prospects, and I have actually put it at the top of my watch list for now, ready to open a position if the price continues to drop down, say below about 20 bucks, I reckon. So that's it, guys. I hope you enjoyed this one. As we approach the end of the year, remember to subscribe to my channel. I'll be doing another update on my entire stock portfolio and its performance for the entirety of 2020. I'll release that video in January next year. Until then, Merry Christmas and catch you guys on the next video.